Let's start with the recording. Hello, I want to show you the strategy here. My name is Mrs. Money, and I would like to show you strategy on how to trade the Crash 1000 and the Boom 1000 from binary.com. Also Crash 1000 and Boom 1000, Boom 500 from binary.com. All right. That's what I just said, that I was giving you a new link so that I could record it for you. All right, so now what we do have is naked charts that I would like us to put the necessary indicators so that we are able to take advantage of the crashes and the boomings. I will show you, number one, how to actually buy boom. Okay, this is crash. Probably let's start with the crash on the naked charts. This is the 1 minute time frame. When you look at the market watch, you notice that crash is always on a buy, and crash 500 is always on a buy, doesn't fluctuate, and also boom 1000 is always on a sell. Boom 500 is always on a sell. So that is the advantage for these assets, that they are very stable, going up until there is a sudden crash that happens and it goes to the sell. And so the crashes are not as many as this minutes on a buy. However, you find that in 1 hour, you can have a series of crashes that happen. For instance, this started at 12:37 chart time, ended up at 13:14. So in a space of 30 minutes, all these crashes were happening. Okay, and also you find that in another space of time, from 11:30 all the way up to 12:15, all the way up to 12:30, it was a good time for you to actually buy crash. Okay, so how do you actually notice it's time for you to buy? From the naked chart, what I would like to show you is the type of crashes that give way to a buy. Crashes like shorter crashes, like these ones that are happening here at the bottom. We see a long crash and then a shorter crash at the bottom, and then you could enter into a buy like that, right? And also we see here similar thing. There was a series of crashes going down, and then after those crashes, because also you will notice that the price is at the bottom here, either bottom Bollinger Band or bottom RSI bottom, but it's oversold. So you would see this small crash showing the loss of strength for sellers, then you enter with a buy. It's safer to do that. And also, whilst in the middle of a crash, like there's been a series of crashes, and then this buying trend started, and then there is a crash in the middle, like this one, small crash in the middle, showing you that it's still going to buy time, about 5 minutes. Look at these ones here. So you could have started after seeing the small crash here, you start buying, and then it would crash with you and you continue buying, still crash with you and you continue buying. Why? Because these crashes are small crashes. However, this one is also small, but it is at the top. If we are going to put our indicators here, you'll see that this crash is almost at the top. Okay, going back to check this crash I'm talking about. These small crashes are giving you time to actually buy in the market. How much time you use to buy? I always say buy for 3 minutes. Buy at the most, the safest is 3 minutes. If you enter a buy, you enter 1 to 3 minutes and then you come out. You wait another crash and then you enter 1 to 3 minutes and then you come out. Another crash, 1 to 3 minutes. By the time you you calculate those 3 minutes, they would have made you a good amount of money. Why 3 minutes again? It's because it's usually a time to buy. Normally they space themselves 5 minutes apart, and if it has to be lesser than that, it's just 2 minutes, and there's nothing you can do with that. For instance, here there's nothing that is spacing them apart, but the short crash is the one that I'm talking about. After the short crash at the bottom, you can start buying. Short crash in the middle, you can start buying. This is not a short crash and it is at the top, but it shows you that the big crash, there should be a big crash at the top. So if there's a crash like this size, it's a sign that it's an uptrend. But if you check in a bigger time frame, you will find that at these times, the crash asset was actually going up. So here is this 3 minutes I'm talking about, 1 to 3 minutes after the crash, 1 to 3 minutes, 1 to 3 minutes. This one was a long crash and it almost went into the bottom, but he said here to start off from the bottom, we need at least a shorter crash to happen, and then we can be able to buy our crash. Here we have this crash I talked about in the middle, and then you can buy off your 3 minutes. I hope I'm making sense now. You can see that this is a repetitive, it's a repetitive pattern, and it can be exploited for that. A smaller crash, you can buy. I wouldn't say if you see, because some people will say, what about there's a whole amount of buying a price? No, you can't. In any trading, you can't take all the money for all the crashes and all the candles. You can never do that. You always make your own goal. Like you put a entry point and a take profit. So your take profit in this strategy is that you trade 3 minutes and you come out. You do yourself a favor, you do yourself good to put a bigger lot size. Say if you put a 1 lot, if you come out here, you come out and you would have made more than $1. I think you've made $3 because around a minute is around $1 when you are on 1 lot size. So you would have made at least $1. If you are on 10 lots, then it means that you would have made $10, $30 on these 3 minutes. So these are clean 3 minutes that you can utilize and be safe in the money. For instance, this is a thin window, 1, 2, 3, and then a big crash happens. And the only thing that could save you here is to see that this candle was not yet at the bottom. Okay, I'll add a Bollinger Bands just now so that we can see. Here, a small crash, you go 3 minutes after it. A series of 4 crashes, down, 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 and then it starts buying. Well, it's up to you, but there's no shorter crash here. Shorter crashes. Yeah, but you basically can see that if crash is on a buy, you can actually make money by entering and coming out. Because if you enter, say, oh, it's on a buy, and then you start entering, then these crashes catch on you. Okay. Here is another very delicate moment where the crash happened, and then this series of crashes happened. So how can you avoid getting caught up in these kind of crashes? Of course, in any crash, this is what I teach my students. If you are in a trade and a crash crashes on you, there's no need to wait out and say, like for instance, you were here in this trade, you entered here, you entered and this small crash crashes on you. This is negligible, you can continue. You were in a trade, say because you must have an entry point. The entry point was this small crash. Then you enter in here with a buy. Then you make your profits. And you see another small crash, you enter with a buy. But say now you were here and then before the 3 minutes was over, a big crash came on you. Come out rather than to say I will recover, because you don't know that after that crash that crashed on you, like say you were in this trade and you went 3 minutes, 4 minutes, 5 minutes, and then it crashed on you, and you said no, it's gonna come back, and it starts buying again, and you don't come out, and then you'll be in even bigger losses. So you must always time yourself, know what you're doing. What you're doing is looking for these small crashes. You see the small crash, you enter with a buy. All right, let's add, okay, maybe before that, let's look at a boom, because boom is the opposite of crash. It works the same way, just that boom will boom at the bottom on the support. So it will lose momentum at the top. So when you see like this boom here with a shorter boom at the top, then you enter with a sell. The boom that I'd like you to notice, okay, the one thing that I did not highlight about these shorter booms is that they should be in the middle. By middle, I mean there was a longer boom before and then it happens in the middle. So it's not like at the top like this one. Here, there was a boom and then it boomed here, almost you could say middle, because this one is totally engulfing. It must be totally shadowed by the previous boom. Then you can say it's in the middle. Okay, that's how I differentiate whether the boom is at the bottom like this one or the boom is in the middle. Because there was a previous boom and then it just boomed in the middle like these ones here. This would be a middle boom, as much as it's happening right at the top, but at least this is what I'm talking about, a middle boom. Okay, and then it go 1, 2, 3. But this one also didn't go down. So you can see now, Uti, this is at the same level. So now this is booming at support. This one is booming at support. So it's not a safe boom to trade the sell afterwards. And this one boomed and then it went down. This one is in the middle, because you can see that the trade went a bit down, and then this one is engulfed by all these other big candles. So it's right in the middle of the trade, and then it booms, then you go 1, 2, 3, sell. And then when it booms again, these two, there's not much that is showing a strategy on this one, but the only fact is that it's at the top and then it booms and then you can sell here. But also here you'll be helped by checking the trend itself. This is where you would make a loss. This is our OTM, because it boomed here, short boom in the middle, right? And then it went 1, 2. And then this one boomed again, but now you're out of this trade, because this would have boomed you out. Like I said, that when you are in a trade and there is a boom, come out, rather than to stay and say it's gonna sell again, and only to find this is the kind of scenario, this boom and another one is coming, and then you never recover your money. Okay, so when we talk shorter boom, we're talking something like this. It boomed and then there is a level here, but the level is a resistance. So it counts as the boom of the middle boom you sell. Okay, now this is an uptrend. You would see this. I'll show you how you see an uptrend, a middle boom, smaller boom, then you go sell. Okay, I think I've made myself clear. Let's check the boom 1000. I said it's the same asset. So why they call themselves 1500 is that for 500 it's shorter time for the booms to happen. So they give you a shorter time for you to wait the boom. For instance, here the booms take longer to boom, but they are bigger as well. Okay, so what you find here is that for you to make money on the strategy of selling boom, you need to still look for the smaller booms, like this one here, boom, and it's in the, let me show you what I mean. If you take your crosshair and you put it here, you can see that it's on the same level. So it's resistance. So it's safe to go 1, 2, 3 on this one. Okay. If it was a higher, excuse me, if it was lower, it wouldn't be safe because it could still boom. Okay. This one is not the one. Look at it. It's already booming higher. So it's not a middle boom. It's not a middle boom because it boomed higher than the previous one. I hope I'm making myself clear. This is boom 1000. That's why they say boom 1000, because they say they guarantee you that in 1,000 ticks you will definitely get a boom. So if you don't get a boom and it's 1,000 ticks, you count them. You can't sue the broker and say they did not hold to their words. So the asset says in every 1,000 ticks there'll be a boom. The ticks are these 1 minute Renko candles. Okay, this is a middle boom, an example of a middle boom. This one would have boomed, and if you entered, then you would boom, boomed out, but you realize this is also a shorter boom, and then you go down 3 minutes, and then you're out. Okay, this was a boom, but remember, boom booms in on the support. So when you see a smaller boom, but it's on the bottom, it's not safe for you. Also, this one is not safe because you can see that it's no longer engulfed by the previous boom. So it's not safe for you to go selling after it. Okay, right. I hope I'm making myself clear on this method of buying crash and selling crash. How to actually say, when people say I was in a trade and then suddenly there was a boom and I was lost, I was in the negative. It's a reality, but you can alter that reality by knowing when to actually buy, when to actually sell boom. Okay, right. These patterns you can see, if you've done forex before, you can see that this is a rising triangle. Okay, into a rising pattern, which means that the selling is strong, but the buyers are there. Of course, if we had buyers and sellers on these assets, it would be a lot different. But the reason why it's stable like this is because there's no buying pressure or selling pressure. These are just movements that are created by binary.com. The asset is like OTC market on IQ option, which means that there is no orders that are filled. There are no supply and demand areas, only simulations. So this would be a simulated move, but it resembles the movement of forex, not on the 1 minute as you go to the higher time frame. Okay, right. I think I've established your buying with before we put the indicators, because I wanted to show you the price action. Boom in the middle, you sell. Okay. How you determine it's in the middle? Boom. You look previously, was there a boom that is previous to it and it's bigger? Yes. Is it happening towards the middle of the trend? Yes. So you go selling. Okay. Right. So practically after every boom, you can make profits if you are selling these three, except that when it's on an uptrend like this one. And there's no telling that it's on an uptrend, except that when it starts booming from support, the bottom, it's not safe for you to enter a sell because you are not sure how long it's going to buy. But the clear indication that you can take is that after a long stretch of sell, there'll always be a correction. So more booms come after a long period of sell. Let me talk also about the gaps. The gaps are a reality, but they are not scary because this gap is smaller compared to this boom here. So if you were on a sell and then this boom happened to you, you would really be in a big problem. So what I mean is that the gaps are there, and they don't mean anything. Like in forex, you know that when there's a gap, the price is still going to go and clear the the orders that were omitted when the price dumped the gap. So no, here it's just one. It's a gap that is just like another boom. So the price went from here to there, but too sudden there wasn't even time to paint a candle. Okay, right. But this would be a good entry here. Immediately you see the small boom, you start going 1, 2, 3. Okay. Right. I think I've spoken enough about the buying and selling the opposite way. So this is boom, which means the candles going up are bigger, so you can sell it when the smaller candles happen in the middle of the trend. Okay, now let's quickly put and add our indicators. We insert the first indicator is the Bollinger Bands. We use the you can use any color, but we use the Bollinger Bands on default, period 20, deviation 2. So as we put the Bollinger Bands now, it paints the picture clearer. It paints the picture clearer of the movements of boom in this case, because we got boom here. So you can see that on boom, the most engaged Bollinger Band is the middle and the upper Bollinger Band. The middle and the upper Bollinger Band. So when price hits the bottom, then price is likely to boom. When price goes all the way down to the middle Bollinger Band, then that price is likely to boom. Look at this. The price went, okay, let's measure this one. The price went boom, and it went above the upper Bollinger Band, and then went down and boomed again, and then went down below the middle Bollinger Band. But the minute it touched the lower Bollinger Band, it boomed. It went down again to touch the lower Bollinger Band, and it boomed. It went down, it started touching, and then it boomed. So the Bollinger Bands, they are still using their power to guide the price on the lower Bollinger Band. That when price touches the Bollinger Band, lower Bollinger Band, there'll be booms. But at times when price is trending like this, when it's on a strong sell, you cannot be able to say it touched. For instance, this is the first touch of the lower Bollinger Band, but nothing happened. So this is a signal for you that this is now an uptrend, I mean a downtrend going down. We are now adding indicators so that the indicators now will help us to be able to time our boom going up. Okay, for selling boom, we don't really need indicators because we sell boom on the shorter booms that happen. We sell boom after a boom has happened, and then we go 1, 2, 3. But when we see the shorter boom, we go with confidence. Okay, so we don't sell after every boom. We only sell if the boom has been within, when the boom, excuse me, I'm trying to get this. When the boom is below the previous boom, like this one doesn't qualify, this one also doesn't qualify, this one would qualify, but seeing that it's booming from the middle Bollinger Band, it would be a signal for you that it's going to be a buy. As the price goes down to the middle Bollinger Band again, it starts booming. So now the middle Bollinger Band is your entry point going up. I hope you can see that. Your middle Bollinger Band is your entry point going up. Now we're changing the strategy. We are now buying boom. We're no longer selling boom. To buy boom, look at the middle Bollinger Band. Look at the lower Bollinger Band, but rarely do you see it on the lower Bollinger Band. If it's only it goes to the lower Bollinger Band after a long sell. But on the trending, when it's trending buy, it will go to the middle Bollinger Band and start booming. So the minute you see booms from the middle Bollinger Band, you must know that it's time for you to wait for price to touch the middle Bollinger Band, and then it's gonna go boom. Okay, right. We're just looking at the Bollinger Bands, how we use them. Price has touched all the way down, but this is not the first touch. You must please be aware of that. It's not the first touch. So when price moves from the lower Bollinger Band, it's normally going to be shorter or bigger booms, but it's not easy for you to time it. Okay, except when price is now moving from the middle Bollinger Band and then it starts booming. You wait for another price to touch. When it touches, you already have a buy here, and then it starts booming like that. Okay, right. So how to actually enhance your buying? You can see now when we're looking around, going back, we can see that these shorter booms that I said are good for buying. If it booms and then it doesn't go above the middle Bollinger Band, it's a signal for you that it's a middle boom. See, signal that it's a middle boom until it almost crosses the middle Bollinger Band, then it's a longer boom. It's no longer a shorter boom. Okay. However, here you would really be in a ditch because this is a shorter boom, but immediately it's followed by another boom. So if you enter the sell here, you would be in loss. But the other thing that would guide you is that this boom is not in the middle. It's not like engulfed by the other candle here. Same thing with this one here. It's not short because it touched here, but the other thing is that it's no longer in the middle. It's no longer booming like here. All right, I think I've made enough sense on that one. Let's quickly look at the other indicators to insert. The moving average, 200, black, exponential moving average. I put color black, you can put any color. This one is a big moving average. It helps with the price guidance, telling you if the price is largely on a sell or largely on a buy. When price is below moving average 200, it tends to sell a lot. Like you can see here, there's more sales. There's more sales here. After the price was crossing here, down it started selling and just booming little and selling. All the shorter booms you can see here. But let's try and look at the price when it was above the middle Bollinger Band. I mean, excuse me, above the 200 EMA rather. Here it sends the presence. In the 1 minute time frame, it sends the presence of the 200 EMA and then it started booming up. Okay. Unfortunately, we can't be able to see everything. We try and minimize all that's better. Here is the price. You see the movements that they are different when you compare the upper, the price that is above. It's got more booms than the price that is below. So that is a work number one for the 200 EMA. Okay, is to guide the price and to actually show you the trend. Okay, let's put also when price senses the 200 EMA, it tends to either go lower or bounce. I'm looking for a place where it bounced. Okay, here. For instance, it was okay. Other thing I need to highlight about the movements of these assets is that they have a lot of consolidation time and then the breakouts. So you can see there's a consolidation and the price was ranging across the moving average. And then as it starts bouncing up, it is showing us a signal of, I'm trying to get to this chat. Oh, quickly, let's see. You're no longer following. Oh my God. Okay, the recording is there, so you will go back and get whatever it is that you didn't get. For now, I'll just continue, and then we'll refresh the link, and then we will continue if we were not able to discuss. But I'll give you time to actually reflect on what you are doing. So you can see now this is a trending moment. I mean, this is a sideways moment, consolidation, and then a breakout. So this is the work of the 200 EMA, especially on the boom. If you see it on the crash, you will see that it's very sensitive. Crash is very sensitive to the 200 EMA. When it sees it's approaching, it then crashes. But this one, normally, it booms away from the 200 EMA. Okay, right, this is all moment of consolidation. Okay, let's add another EMA. Insert another moving average. This is very important, by the way, because this is how you're gonna set your charts. Moving averages are there solely so that we can be able to time our booms. To now buy boom instead of selling boom, we need indicators. So the other indicator we put is period 35. SMA. I put it on color yellow here. Okay, let's use this color gold. And yeah, that's fine. And then another moving average that I add is moving average moving average 10, and make that exponential in color red. Right. Okay. So now I've got all my moving averages on the charts, and the other indicator that I will add on the 1 minute time frame is the indicator RSI. Oh God. RSI level 14 there. Okay. So now we've got these indicators on the charts, and that's all you need for your charts. So you can save the chart. Save the template. $1,000 strategy. Okay. Okay, right. So we put this on every chart now. Now let's quickly look at how we use the moving averages that I added, because I didn't just add any, I added the ones that are important. Okay, this is in a consolidation trend. Okay, and what is engaging mostly on the consolidation is the Bollinger Bands. When the price moves down below the okay, let's start from here. Price moved down here, and then it didn't sense the middle Bollinger Band, but when it went to average 35, moving average 35, it boomed up. You see that. So again, price went down here, and then it's at the bottom at the Bollinger Band. But what you notice here is that since this is a trend, on a sideways trend, the support is very important. So when price touched support again, it boomed. So this is now condition number 3. We said okay, on the consolidation, just consolidation alone, the first condition was on the EMA, was on an MA 35, and now the second condition, it's booming because of support, that it's reaching the area of support, and then it booms again. All right, and then the other shorter booms here are your entry points for a sell. But to actually buy again, what's happening? Okay, it seems to be moving on its own. Okay, but we're still on a consolidation here. You can see the 200 EMA is flat. Okay, we've got a boom here on the 35. And we have a boom here on the support. And here this boom came because of these moving averages here. As price will go down, right? And then when price is touching, like this small one, it went up. And when I said, this is the exact one that I said, don't enter when you find that there is a small boom at the bottom towards the Bollinger Bands here. You don't enter with a buy. Okay, right. So this was giving us a boom again, and here we've got a boom right after the price crossed all the 3 moving averages, and the other one here, it started booming as well. So we are running out of time on this recording. I'm going to refresh the link, and then we're going to continue